Good evening, Dojis. Is Bitcoin showing signs of reversal? We'll take a look, we'll do some price prediction, and let you know what our bots think. We'll also talk about why there's no such thing as an expert trader. All coming up next on the Doji Show. Doji Show! This episode of Doji Show is brought to you in part by PineBot. Visit pinebot.com today for access to the world's most advanced algorithmic trading bots. Put your portfolio on autopilot with PineScript-powered AI. Long and short, bull or bear markets. Browse the strategy marketplace and subscribe to user-created bot strategies. Then, load them up in our easy-to-use bot commander interface. Deploy the best strategies against the market for the win today at www.pinebot.com. And welcome back to Doji Show. I'm your host, Tensor Tom, and before we get into the charts and price predictions, let's break some crypto news. A Chinese survey of 4,200 participants showed that 40% of them are willing to invest in crypto in the future. In an unrelated story, the Chinese government said it had about 40% confidence in the future widespread adoption of cryptocurrency. When asked, 40% of the survey participants said they agree with their government's prediction. Doji Show tried to reach out to the respondents, but ran into trouble as it turns out that 60% of them have now disappeared. In other news, pinebot.com, the website sponsoring Doji Show, has now entered into Release Candidate 1 Revision 2. RC1 brings with it a new level of stability that has been strived for months. Users can now be confident in deploying automated trading strategies on the PineBot platform. Currently, PineBot RC1 has been tested on BitMEX's XBT pair, but stability on exchanges such as Binance and Coinbase should be certified in mere days. The National Bank of Kuwait, one of the largest privately held financial institutions in Kuwait, has announced that they have launched the NBK Direct Remit for cross-border live payments. It uses Ripple's enterprise blockchain technology solution to provide customers with a frictionless remittance experience and fast cross-border money transfer solution. Ripple currently sits around 36 cents. Kraken has added the ability to margin trade Bitcoin Cash and Ripple, along with the already present Bitcoin, Ethereum, Ethereum Classic, Arga, Monero, and Tether, bringing its margin trading offerings to a total of 8 cryptocurrencies. Margin trading of all 8 will be available on all of Kraken's platform. Kraken now boasts an improved user interface and integrated charts and tools, as well as supporting mobile trading. Kraken's news release adds, "Please note that BCH and XRP are not collateral currencies. This means you cannot margin trade positions against the value of your BCH or XRP balances." I'd say that's about enough news for today, so let's dive into some charts. Alright, now let's see if we can make some sense of the Bitcoin chart. So, Bitcoin currently sits at $3,800 about, and right now we are on the hour chart, and it looks like we just came off of a little correction to the downside, and we're going to probably continue a little bit more downside here. I think we're going to have a bit of a squeeze here, and then probably after that, after a bit of correction and squeeze, we're probably going to have some more upside. But let's go ahead and zoom out some, because the hour chart isn't going to tell us everything for sure. So let's head to the 4-hour chart. Okay, so on the 4-hour chart, it looks like we have we're just coming off of I'm looking at the Tensor Cloud here, which is a free indicator that you can get on TradingView. It's one of the indicators I created. It's open source, and I have a whole bunch of them. Everything you see on this chart, except for the volume profile, are free indicators that I coded, and you can find them on TradingView on my profile, Tensor Tom. So, anyways, looking at the Tensor Cloud here, which is similar to Ichimoku, but based on a completely different algorithm. We're coming off of a red cloud here, which should be followed, of course, by a green cloud, would be the most probable thing to happen, and it looks like I was correct in that it is going to be a bit of a squeeze, and then we should have some upside coming off here as soon as this crosses into the green. As soon as the future span crosses future span A crosses up into future span B, then we'll have a cross to the upside. Also, looking down at the ergot oscillator, does look like we're squeezing here too. So, you know, we could have a little bit of a pullback, but then I would expect a probable breakout to the upside. And if we're going to go ahead and look at our EMA target and trigger, that's another free one here. I would also, looking at that, be expecting a break to the upside. Now let's go ahead and take a look at the volume to see what our profile looks like right now. So it looks like we do have a value area above. So I would definitely expect price to round us out here in the typical cup formation that we're used to seeing. And if we look down at a fractal level, so we want to look, anytime we're trying to analyze a chart, we always want to see what the chart is doing on the small scale, because that's what it's also trying to form on the macro scale, because the charts are always fractal in nature. So what we'd be looking for is a pattern playing out on the micro scale that is compressing to form itself also on the macro. And of course, we're going to be seeing those cups as usual. So here we get the W and M patterns forming what some people refer to as butterflies. We have a butterfly forming here, or a W, whatever you want to call it. And so what that tells me is that we have tremendous profit potential for a long position on Bitcoin. And there's something that I saw earlier I would like to point out to everyone as well. Let's go ahead and back out to, I think it was the weekly chart. Was it the weekly? Wait a minute, I'm gonna have to get rid of an indicator here to show this properly. Probably the cloud, yeah, okay. Alright, no, I think it was the monthly. Let's go to the monthly chart, which of course is gonna show super strong signals, anything you see on the monthly chart, of course. Now, what I like about the monthly chart is that you can see that we have, ever since the highest high up here around $20,000, that we've been in this downtrend ever since, right? Now, what strikes me about this here is, look at this doji we have here. We have a big wick to the upside, is what you would call it basically. And as long as we close, because we're about to close this candle, right? So what I see is basically what amounts to a reversal candle here. As long as it closes like this or similar, where we have this big wick on the downside, then I would be really I'd be really bullish coming into this next candle, because this is exactly the sort of rejection you want to see in a reversal. And of course, there are other reversal signals that we'll want to be looking to as the next candlestick develops on the 1st of January. But what this indicates to me is that January has the potential to be a really good month for Bitcoin. Now, looking at the volume profile here, this also has confluence with what I believe was the day chart. And if we go down to the day chart, you'll see that, okay, we're at this high volume node down here, and so the price is going to tend to go next to a low volume node, and I think it's going to do it in the bullish direction to the upside. So coming down, or going up rather, you can see that we're going to have to pass through some rough volume here just to get up into these numbers, but I do believe that the pattern will most likely play that out for us. And then we're going to come up here, and then we're going to get to around $6,000, Around 6,200 is where we're going to hit this high volume node, and when we do that, it's going to be difficult, though. I think Bitcoin's going to have a lot of trouble getting past that once it gets up to around 6,000, 6,200, somewhere around there, because we have this big value area sitting above us, and it's going to be really difficult for Bitcoin to push through that. So, you know, we'll see what happens. It's difficult to predict how that's going to play out. We do have a lot of bullish signals here on the EMA target and trigger. Also on this MA indicator that I've created here. These are really good signals usually when you get confluence between them, and especially these two. I really like getting confluence between these two. And then especially if we start to squeeze, which is definitely happening, it looks like. So I would expect with this pattern that I'm seeing at the edge, a possible quick downturn, and then probably a wick, and then we would round this out. So really promising signs for Bitcoin coming in January. Let's go ahead and take a look at our bots and see where our bot positions are and what they're looking at like right now. Alright, so let's go ahead and look at some of our bots, our automata on TradingView. We have these strategies that are also published. Now these aren't free, but I am going to start doing these segments here on Doji Show where we go over the positions that each one of them are currently taking. So we're on the Bitcoin chart here. We have the Aurora strategy, which is a really good strategy. Currently, Aurora strategy is short and has been short since the last 45-minute candle. Moving to the next one, we have Catabasis, and Catabasis also looks to be short. This is on the 30-minute chart and has been short. It's been short for a long time. Moving to the next one, we have the Hulk strategy, one of my favorites. Hulk actually just went short, so so far we're looking pretty short. Next up on the 45-minute chart, Promise strategy. We don't have a position there. We were short last, and it looks like it's holding out on Promise. Next up, Quantum Wave strategy. No position there either. And that does it for Bitcoin. So all in all, it looks like right now we are definitely short. Now, what I said before about the Bitcoin chart and the potential upside that I'm expecting, these strategies are meant to take advantage of a lot of price movement, right? So it's not using the weekly or day chart. It's getting in there and trying to extract as much profit as possible from the current price action. So what this would tell me as far as the upside potential that we were just talking about before is just sort of what I hinted at towards the end of it, which is that, yeah, there's this upside potential, and I am definitely expecting this price action to play out to the upside, most likely. Of course, we don't know, but most likely. And but what these bots are telling me is just sort of what I hinted at, which is that we're gonna have some pullback on the downside, and we should just wait, make sure all this corrective stuff is done. And I think that next monthly candle that's coming up is gonna give us the reversals that we're looking for. So let's just wait for this squeeze to be done with, and definitely be looking at the charts, paying attention to them as soon as that next monthly candle forms. Alright, let's go ahead and take a look at the Ethereum chart. Ethereum is actually my favorite chart to trade. Not for bots, it's not what I put bots on, usually. But it is really nice, especially those who do margin definitely know what I'm talking about. So looking at the Ethereum chart, Ethereum is obviously going to more than less follow what Bitcoin does. No flippenings today. So taking a look here, looks like we had a bounce off of 88.07. This is ETH USD pair, and it looks like we had a rejection off of 140.93, and I would just be expecting the same sort of squeeze that we're seeing on Bitcoin. So not much to talk about there, but this is the day chart. Let's zoom in a little bit and see what we can find. Okay, so zooming in, let's go to the 30 minutes, and let's bring back our tensor cloud. Tensor cloud. Alright, so the tensor cloud is showing that we are probably about to have some downside here coming up, and you can see that we are pulling back off of a green cloud. And then what you can also see is that we had this bearish signal here. Also, we are above this mean here. We're above this average here. So yeah, I would definitely expect, you know, it's a probable pullback for sure. And we did cross down here on the ergot. We have a few bearish signals here. So yeah, we'll see a bit of pullback, and then, like I said before about Bitcoin, what we're going to be looking for is that these monthly candles to change and see how that goes. Now, out of curiosity, I want to look at the month candle for Ethereum and see just what that looks like. Okay. Interesting. Yeah, of course, it's going to follow a similar price pattern, and so we see this big wick here for Ethereum. And yeah, what that tells me is that we're just going to be looking to Bitcoin. We're going to be looking to that next monthly candle and see how it starts to form, and most likely it's going to be a reversal to the upside. We can go ahead also and check out our bots, so let's do that. Let me go on full screen. All right, so same sort of situation here for Ethereum. We have Aurora strategy on short. We have Catabasis strategy also and a short, same as it was for Bitcoin. We have Hulk strategy, also just entered a short, just like Bitcoin, of course. Promise strategy is not in a position. Quantum wave strategy, not in a position. Last thing it was in was a short-term long. And so that's it. That's all we have for Ethereum. And of course, like I said, it just, you know, it follows Bitcoin. We look for Bitcoin to see what it's going to do, but it's really good to trade, and it's actually setting a bot loose on ETH USD. Always a great idea. All right, let's go ahead and take a look at Ripple. That would be XRP BTC. So looking at the XRP chart, we have it loaded up here. It looks like we are in a squeeze here as well, of course, because everything follows Bitcoin, and Bitcoin is currently in a squeeze, so we're going to be in a squeeze, you know, on pretty much anything that isn't wildly diverging from Bitcoin right now. So here on XRP, you can see we have regular waves, down, up, and then we're getting smaller and smaller in this compression pattern. And what happens after we compress? Well, we'll expand, of course, because that's what fractal compression does. Classic chart here for that, where you have, you know, you can see here this wave, and then a wave that mirrors it and matches it to the downside, then to the upside again, downside, smaller and smaller until it compresses down until it can't compress anymore, and then you'll see a breakout. We are in a big high volume node here, same as we are in Bitcoin, but it looks like it's a bit more pronounced for Ethereum, for Ripple rather. We go on a higher time frame, we'll probably see similar playing out there as well. And yeah, so actually what I see here when I look at XRP is that we're at this high volume area right here, of course, but what is above us is really low. So what I expect is that once XRP finally does break out here, it's gonna really explode, and you're gonna see, as long as it does, assuming it does break to the upside, it'll probably be very violent, I'd imagine. And we can also go ahead and take a look at our bots to see what they make out of XRP. Now, my bots aren't currently optimized for XRP in the least. So if you subscribe to any of them, I do not suggest loading them onto XRP. But even though they're not optimized for them yet, I haven't got around to it. We can still see what a couple of them are doing, because a few of my strategies will actually give you, pretty useful data on them, but not all of them. So moving over here to Aurora strategy, you can see that Aurora just took a long, and we'll see how that plays out. We had this huge wick to the downside here, so we could definitely see some corrective movement downward. I would not suggest entering along here as this strategy is done. And if you look down, yeah, it'll probably come down. I'm not expecting it to go on this huge bear run or anything like that, but definitely a bit of a corrective move here before continuing its pattern. And then, of course, it's probably, like I said though, going to compress down and expand to the upside, I believe. I believe that's where we're all headed. I believe that's where crypto is, all the coins are headed right now, all the major coins. Alright, so on Catabas's strategy, it also went long back here. So if you are in a long for Ripple, probably not the worst move. I would probably wait to see if we get a little bit more correction here, but all in all, not terrible. Now this is the last thing that Hulk strategy did here. Was it was in a long and then it exited here. Looks like it actually would have been a decent trade that Hulk did there for sure. But yeah, like I said, what we're really looking at and looking forward to with all of these coins, though, Ripple included, is just the break to the upside after this compression, which I do believe is coming early January. So now on to today's main topic, why there's no such thing as an expert trader. And what do I mean by that? Because there are a lot of people who are really good at trading. There are people who are good at analyzing charts, analyzing trends, telling you what kind of trend we're in, what kind of trend we're more likely to go into. Myself, I'm good at looking at the charts and figuring out what's most likely in most situations. I've been wrong plenty of times though. I can look at a chart and I can tell you where the price is, how it got there, what it's most likely to do in my mind, and I'd say that I'm right more often than I'm wrong. And that is the mark of someone who is a good analyst, someone who's good at analyzing the charts and telling you what's most likely to happen next. But the thing is, I could never be an expert trader. I don't believe that anyone could ever become an expert trader, because I believe that the expert traders among us are no longer human. And this has been in development, obviously, for a long time. I'm not sure exactly how long algorithmic trading has been around, but certainly since the 80s. And what people normally think of when you say algorithmic trading or bot trading, they normally think of sort of the more well-known algorithms that just everyone knows about. So those are algorithms that judge the difference between the bid and the offer, or the bid and the ask price, and those are referred to as that's usually referred to as high frequency, high frequency trading. Those algorithms are sort of like the least common denominator, and they work best in times of high volatility. When the markets go sideways, those sorts of algorithms don't do well at all. Maybe not at all, but usually don't, because they have to adjust their strategy at that point, and that's where human traders typically shine. That's where human traders typically do their best, are in trending markets, where you can easily define sort of the support and resistance area and say, okay, we're probably gonna bounce between here and here, and that's fine. Or it might be fine for some, but it's not fine for me, because especially in crypto, in cryptocurrency, we trade these charts, and the algorithmic, in crypto trading, it's definitely a case where you have algorithmic trading just running free, because there aren't sorts of regulations that you have in other markets, for one, meaning that there are no limits as long as whatever you program can run free on the market, for all intents and purposes at least. There are certain exchanges where they don't care what you do, what your bot does. It's a free and open market, and that's great. Actually, I love that. I think that free open markets are what we need, and it's the best way to determine true price. Except that when humans are in the market, they are typically losing, right? You've probably heard this statistic. You'll hear somebody say something like 95% of traders lose and only 5% of them win. Okay, now that's true. I'm taking it as the truth. I'm assuming it's true, right? And then but I think it's even less than that. And I think that of that 5%, you might have a very even smaller percent that really actually perform well, not just break even or make a little bit extra. They'd actually really perform and to what one might consider successful, right? Now, why that is, it's because it's not easy. It's really hard. Trading is really hard, and moreover, I think that it's sort of a fool's errand for anyone, even if you're good. No matter how good you are at charting and even trading in general, I think that you'd serve yourself better to just let software take over. And I say that because there's no way that anyone, no matter how good you are, no matter how good you claim to be, no matter how many trades you've won, no matter what percentage gains you've seen over the past X amount of months, you will not outperform the bots. And even worse, you are trading against them. So it kind of puts things into perspective, I think, and some people need to hear who don't realize that most of the market is made up of algorithmic trading, and you shouldn't even be, in my opinion, you shouldn't even be trying to trade manually, no matter how much you've studied, no matter how much experience you have, because there's always the option of algorithmic trading, and if doing that garners you a net result greater than you would have done by yourself, why would you take that risk? everyone always talks about risk and how they're so great at minimizing it, and that's their main objective. Well, if you were great at minimizing risk, you wouldn't be calling yourself a trader. If you think about it, that's the most logical conclusion one must come to, and anyone who doesn't is either, either lying to everyone else for the sake of promoting something, or lying to themselves because they don't want to admit it. And probably the latter is much more common, obviously. Or, on the other hand, it could just be, in a lot of cases, that people don't realize or don't have faith that they could execute an algorithmic plan, to have that managing their assets. But certainly they could, and anyone, I just can't imagine how anyone could go so long, be in the markets for, years without realizing that that's what they need to come to. It baffles me sometimes to see some of these people on YouTube who talk about all the years of experience they have, and they're still sitting there, manually trading. A lot of times I'll see someone talking about, here's the trade that we put in for ourselves and our subscribers. Oftentimes they'll have a trading group people subscribe to or something like that, and I'm just thinking in the back of my mind, like, how better served would you and your group have been had a bot been executing that trade? How much more money would they have made? And when I think about it like that, I don't consider it just extra money they could have made. I consider it money that they've lost, or potential profits lost. So, it's definitely not something to consider lightly. Probably one of the problems, as I alluded to just a moment ago, is that maybe a lot of people don't realize how they can get into those sorts of things. I mean, I think there are a few sites dedicated to algorithmic trading that people can actually sign up for. Even fewer of them that actually work. I signed up for one like some months ago. I'm not gonna name it on here, but it was just awful. Like, the site was beautiful and the interface was awesome, but it just performed so poorly. I'm not sure how it's doing now, but maybe they've improved. Now, I started PineBot, and you may have seen the commercial for that in the beginning of this episode, and that is definitely an awesome option for anyone who has used it before the current release candidate, RC1. It was really rough, and anyone who had successfully used it when it first launched would have told you that when it did work, it worked. It was really awesome. But we had some problems there in the beginning where the trades would go out of sync. So the trades that it was coming up with were actually really good, but it just wasn't executing them properly. And those issues have now been resolved, at least for trading Bitcoin. I do all my testing first on XBT, or BTC USD BitMEX, and so all that is working really nice now. And I would encourage anyone or everyone to check that out. You don't even have to pay for anything when you sign up just to test it out. You can use the BitMEX testnet and the demo strategy just to see how it works. So there's that. And yeah, I think the big takeaway is just that there's a lot of pride that comes in being able to analyze something better than other people, and that's great. I do these segments here on Doji Show where we analyze the market, but I'm not suggesting that people should be manually trading when I analyze the market. It's just that there are a lot of people already invested, and there are people out there looking for advice when to get in and out. There's a lot of people holding bags, and so it's useful to have that kind of news and a bit of analysis. It's definitely important to be able to do analysis when you're a coder, when you're programming machine learning for markets and strategies and such. I don't think I could have ever done it without first learning how to read the market, read the charts. That's a no-go. That's probably why there are so few people who are developing algorithmic trading bots, is that you have to really know both machine learning and reading the charts to be able to get ahead and program something that is going to work. Over the past year, I've put so much work into programming these algorithms, and there have been so many failures along the way, but it's finally coming together in a way that makes sense to keep running, and I'm really excited about that. So it can be done, and anyone who really puts the effort in, or just is able to find a service that where somebody else has put in the effort, that's the expert, right? The bot is the expert. There's no person who will ever outperform these bots. And that's my main message for this segment, my main message for everyone for today's show. Everyone, please do us a big favor, like, subscribe, hit that bell notification icon, and thanks for tuning in to Doji Show.